In today's video, I'm going to share 5 home buyer tips with you, and I do have more than just these 5 home buyer tips, so if you want to learn even more after watching the video, you can do so by clicking the link in the description below to book a call with me. If you find my videos to be helpful, I'd greatly appreciate if you hit that like and subscribe button. Now, let's dive into these 5 home buyer tips that I hope you guys put to use when you are ready to start looking for a home. First and foremost, you're going to want to understand your budget and financing options. So the first step when thinking about buying a home is to get a mortgage pre-approval. And you can walk into your bank, but I recommend also that you consider an independent mortgage broker. And the reason why is because these brokers can shop around from a variety of different lenders, whereas your bank is limited. For example, if you bank with CIBC, they're only going to sell you a CIBC mortgage. So you might not be getting as competitive of a rate, or more importantly, even a better mortgage package for your lifestyle. The mortgage broker will let you know exactly what documents they're going to need from you. Some items they're going to request is your notice of assessment, so make sure you file your taxes for the most recent year. They're also most likely going to ask for a letter of employment, just confirming you do work where you say you work. Your pre-approval is based on your debt service ratio. So for example, if you have car payments or unpaid credit cards, paying those down will increase your pre-approval amount. Another tip when budgeting is to make sure you have that deposit and down payment ready. The deposit's due after subject removal in an offer, and that's held in a trust account at your realtor's brokerage until completion, which is the time when you actually purchase your home. And this is usually around 60 days from when you remove subjects and hand in your deposit. That deposit's roughly 5% of the purchase price. So if you're timing it with a sale, you need to have that deposit money up front because you won't yet have the proceeds from your sale at that time. And your down payment is a minimum of 5% up to $500,000 and 10% up to $1,499,999. So anything over $1.5 million now requires 20%. And then it's a tiered system for any homes under $1.5 million. Just because 5% up to $500,000 and 10% thereafter up to $1.5 million is the minimum requirement, you still might want to put more money down to avoid mortgage insurance fees such as CMHC and Genworth. They do charge you to insure your mortgage, and that is worked into your mortgage payments. It's usually around 2.5% to 4% of the loan that they give you. But to lessen your monthly payments, if you do have the money to put more down on your down payment, you might want to consider doing that so that your monthly payments are less. Don't put too much down though that you don't leave yourself with a buffer for items that might come up on a rainy day. For example, any home repairs, or if you're in a strata, there could be some unforeseen special levies that come up where you might be required to put a little bit more down than your normal monthly strata payments. To get you going though, a general rule of thumb is you can take your salary and multiply it by 4. Now that's usually where you're going to land for your pre-approval amount. But again, there are other factors to consider in that equation, such as any debts you might have, and also another big one is your credit score. You're going to want to factor in costs beyond the purchase price. Those include things like your property transfer tax that you're going to have to pay unless you're a first-time home buyer. You can reach out to me. There are some exemptions for property transfer tax if you're a first-time home buyer, and also some partial exemptions as well. Home insurance is another one. Now, if you're in a strata, it's not going to be too much, maybe around $800 to $1,000 per year. And that's because a portion of your monthly strata fee goes towards insuring the building, but you do still want to have home insurance to cover any contents in your unit and also to protect yourself if there's a leak. And another tip is that you're going to want to make sure you provide your insurance broker with the deductibles that are outlined in the insurance summary that are part of your strata, because if you're not covered for, say, the full $25,000 water deductible or whatever that may be, you're going to find yourself out of pocket should you incur water damage. Don't forget about annual property taxes. Utilities also need to be budgeted in. So think about your hydro, that's for your electrical. In BC, we have Fortis gas. So if you are in a home that has gas supplied to it, you're going to have to pay a monthly gas bill as well. And of course, we also have to factor in monthly TV and internet costs. If you're in a strata, you're going to have a monthly strata fee. So make sure you know what that fee is and what it covers ahead of time. There's going to be some general maintenance too that your home will require. We talked about it earlier, but make sure you don't put everything you have down for your down payment because you do want to leave yourself with a buffer for some unforeseen repairs and maintenance that come along with being a homeowner. There's also several closing costs that you're going to want to be aware of. These are due at the time of completion, and generally they're going to cost between 2 to 5% of the purchase price. These include things like property transfer tax, lawyer fees. This could even include a fee for breaking your mortgage if you're already a homeowner in the middle of your mortgage term. If you're buying a brand new build, there can also be 5% GST that's due at the time of completion. GST can be worked into your mortgage, but it's still a cost above the purchase price that you might not have been aware of. You can reach out to me if you want to get more into the specifics of closing costs to make sure you get a big picture idea of everything that's going to be due before you even get the keys to your home. Another tip that might seem obvious, but it is very, very important, is get to know the neighborhood before you buy a home in it. Really make sure you get a good feel for it. You can look at listings online and scroll through the photos, but I'm a believer that until you get into the home and walk around the neighborhood, see where the local amenities are, what type of schools do they have. When deciding where to live, it is very important for families to know what the schools are like in that neighborhood. Neighborhoods with better schools obviously sell for a higher price point, and that's going to be good for you down the road for resale value as well. If you have to commute to work, you're going to want to know where the major transit routes are and how long is it going to take you to get to work. If you're relying on transit, you're going to want to map out the transit route. Or if you do have a car, you're going to want to know where the nearest highway exits are and how long is it going to take you to get to those highway exits. A lot of people also want to know what the safety and crime rate is in the neighborhood that they're interested in pursuing. The right location can affect both your quality of life and also the resale value of the property you're purchasing. One major factor that some people don't think about is looking at the official community plan in the municipality that you're going to be purchasing in. For example, I work a lot in the township of Langley, so I always have the OCP on hand, and I do a lot of research for my clients on what is going to happen in that specific neighborhood over the next few years. For example, Willoughby Heights, I just did a video on. They're going to see some massive changes, like some big towers going in along 200th Street. So as a buyer purchasing in Willoughby Heights, I would definitely want to know that because maybe that would affect my decision to live there or not. I do think that the resale value in that area will increase due to the rapid transit bus routes that are coming and just the increased walkability. However, you might be a person that wants more of a slower vibe. Therefore, you might not want to live in that area considering what's coming. So even though you're buying for today, really think about the long-term community plans for that neighborhood. That will greatly affect not only the resale, but again, your lifestyle. Tip number 4 is evaluate the condition of the property. You're most likely going to have a home inspection before you decide to 100% buy that home and put your deposit in. Really pay attention to that inspection report and get quotes on any items that the inspector might flag or bring up to your attention as being maybe a material that's nearing the end of its life. For example, you want to know how long do asphalt shingles last on a roof? Where am I at that point in the lifespan so that you can properly budget out and make sure that you can handle any repairs that might come down the road. You also need to understand the type of materials that are in your home. For example, we have poly B piping that's very common in parts of Langley, especially the Walnut Grove area. Home insurers hate poly B because they're susceptible to pinhole leaks, and you're going to want to budget for how much is this going to cost if I have to repipe the home. It's just not a good material. They actually don't even use it anymore. And again, you're going to pay higher home insurance requirements if poly B is in your property. Other important things to look for are condition of the hot water tank. Those are about $2,000 now, depending on the size of it and whether it's electric or gas. And if you have a furnace, how old is that furnace? Has it been serviced? And if you're a person that enjoys air conditioning or central air, do you have a heat pump or an air conditioner in place, or is that something you're going to have to pay for once you move in? Those can range anywhere between $6,000 to $10,000 depending on the size of it, and it's definitely been a question that I get a lot from my buyers is, does this place have air conditioning, as our summers tend to get hotter and hotter each year. Other things to look for are quality of the windows. That is a very high expense. You're going to want to look for double pane vinyl, not the metal single pane, just for overall efficiency of your home. I'm going to keep it simple, but we could go on. If you're buying an acreage, you're going to want to check out, does it have a well? Is it a drilled well, shallow well? Does it have a septic system? Because those are obviously a lot different than the city sewer and water setup that we see throughout the Fraser Valley. If you're in a strata, similarly, you're going to want to read the strata documents to see how much money is in the contingency fund. How old is the building? We read the depreciation report to get a good idea about the overall health of the building. So we want to make sure that there's enough in the reserve fund, for example, if the roof's nearing the end of its life. And that'll reduce the amount that you'll have to pay in a special levy once it does come time to repair that roof. They are going to take a little bit from the reserve fund and most likely issue everyone that it's an owner in that building a special levy. The amount of the special levy is dependent on how many people own in that building and also how much is in their reserve fund. So you're going to want to look for buildings that have a really well-run strata. I know that paying a monthly strata fee might seem like a burden, but in actuality, it's a forced savings plan where you're putting that monthly money away for something that you're going to need to repair down the road. And that's just part of being a homeowner, is dealing with repairs that come your way. The fifth and final home buying tip I'll share with you today is the long-term sustainability of the property you're buying. So we talked about the development plans in that area, and if that neighborhood's going to be changing dramatically and it doesn't fit your lifestyle, you might want to consider moving somewhere else. But the other part of long-term sustainability is your family plans. Like, are you planning on having kids? And if the property you're buying might be too small for you in the next year or two, you might want to pivot and either buy a bigger property or save up a little bit more to afford that bigger property so that you don't have to move every couple years, because moving is expensive. It's got a lot of closing costs, taxes, and realtors need to make a living as well. It isn't cheap to move, right? So Canadians on average move every 3.5 or so years. I mean, there's lots of things that can come up. Job relocation, divorce, unforeseen events, of course. But if you are able to plan as much as you can, it is helpful in the long run and will save you a lot of money. Market conditions are always changing, so we do have peaks and valleys, and you want to lessen the burden of that, right? So yes, real estate goes up in the long run over time, but you want to make sure that you mitigate the risk and that you don't buy in a peak and then sell in a valley in a short-term period. Make sure the space and layout is good for you as well. For example, if you're someone who loves the sun, I wouldn't recommend buying a condo or a house with a backyard that's north facing. That might turn you off over time, and you may find yourself wanting to move if you're not getting something that's really important to you. Also, how is the layout? Layout is so important, especially in a condo where it is hard to renovate or change the layout of your property. Not so much in a detached home, you're more free to do what you want, but with that comes high costs as well. I hope you guys found this video to be helpful. Again, I have lots more tips. I just kind of chose 5 today that I thought might be helpful to you. If you do want more information and tips on buying a home, please don't hesitate to reach out. You can do so by clicking the link in the description below. If you found this information to be helpful, I'd greatly appreciate if you hit that subscribe button. Thanks so much for watching. I'll talk to you soon.